This is Alan Bush with the Daily Financial Forecast for Thursday, October 11th. Stock index futures putting in a rather weak performance yesterday, to say the least. However, some recovery gains today. Much of this pressure is linked to the rising U.S. interest rate structure and the hawkish Fed. However, I'm starting to sense a change in mood. At least it appears that, from what I'm seeing, that the Fed may be a bit less hawkish next year, a bit less aggressive in raising interest rates. Don't forget, though, we still have the very low global interest rate environment that remains supportive. So I don't think we have topped out in the stock index futures. In fact, I believe we have not seen highs for the move. May take a while, but this bull market still is intact in spite of the pressure we saw yesterday. Take a look at the monthly charts, and those longer term charts still suggest the uptrend is still with us. So once again, this does not appear to be a top in the market for stock index futures. Moving over to the currencies, the dollar index, rather weak as of late, and I think that interest rate differential expectations are turning against the dollar index again now. Also, we have the interest rate markets lower yesterday, but some recovery today. So I think the one fundamental that is changing, and I don't think this is really being talked about very much. Of course, the Fed has been very aggressive in their rate hike scenario and their rhetoric. But I'm thinking that the Fed now may be a bit less hawkish. I'm thinking only 2 more rate hikes next year, maybe 3, and that is quite a bit different than the consensus view of 3 to 4 rate hikes. Don't forget, the Fed cannot raise interest rates unilaterally with the rest of the world's economy either growing slowly, just steady, or even declining, as is the case in China. So either way, the Fed is likely to raise rates, not quite as much as some people are thinking next year. Of course, we still have the December rate hike on track, which I believe will take place. So the trend still appears to be lower for futures. It will not be a straight down move, but higher rates are headed our way, just not aggressively from the Fed. So continue to trade the bond market from the short side. That has not changed. So good trading, everyone. And once again, remember, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.